Hey, what is up, everybody? This is Evan Carthy from evancarthy.com, and today we are going to go over the crude oil price forecast for October 2019. Ever since the Iran attacks on the Saudi oil fields last September, when the price of oil spiked up, I was pounding the table saying, hey, sell this from this spot. It's just going to go back down. This is only temporary, and the gap below is going to need to come down and get filled. Since then, it has done exactly that, and as you see from this chart, here's a 1 hour chart right here. That's where it's hit last about September 15th or so. Price shot way up there, and then when it shot up there, I was saying, look, sell this, don't be a buyer of this at all. One, this huge gap right here is going to come down and get filled, and two, this only temporary spike up right here, so fade this, and ever since it's done exactly that, filled the gap, and it's gone even lower. But starting off right here, this is also going to go along with the post, the crude oil price post. This video is going to go along with it for the charts in it, so it's just a little bit more in-depth explanation of a couple different charts for the month of October 2019. So what we'll start out with is the 1 hour chart. It's about the past month or so, month and a half on this chart right here. Use the 1 hour chart. So what you can see right here is the price has been in a steady downtrend. I mean, pretty much a 45-degree angle that has been going straight down. But one thing to note, especially if you're looking for a spot to get long here, is price is broken out of that downtrend channel. Came down, broke out again, and then used it the previous resistance as support, and has bounced off of it. So one thing when I'm in trade I always look for is I look for this trend line break. If price doesn't just skyrocket off away from it after that trend line break, if it comes down and hits it and then bounces off it, that is a pretty strong signal that the trend has changed for it. But as you can see in it right here, it has also, since it has been bouncing around, it's created kind of a channel right here. So you got your support down here and your resistance up here. So it is just one thing to consider if this is a true resistance level, this black level up right here with that high right over there. Zoom in a little bit, the high on the left, middle high, and this high right here. So if it is, and this is another resistance point, then look for price to come down here back below. And this is just strictly going off trend lines. I'm going to go over in some specific trades because there's a long trade I'm going to go over in a short trade that both of them are live right now. So depending on how you feel about it, either one is valid. So what we have right here, we have that. Let me draw this trend line right up here. So if this is a true trend line going up right here, and this is bouncing off of resistance, which it very well could be. Like I said, you got that high right there, you got that right there, and then this one right here, and you see when it hit up right there in the hourly chart, is getting pushed back down, making the wick, just like the last two did. So if this trend line gets broken right here, you could look for a little bit of a deeper retracement, probably to at least around 50% or so when something like that happens, or it could come back all the way down into this area, down right in here where the black line is, or right where the 78% line is right there. I don't know. It's just a couple things to watch for the next, well, tomorrow's Friday, so definitely Friday, and then also next week to see if it is truly going to break out and go higher, or if it is going to retrace back down and stay in this channel right here. So let me get rid of these lines right here. And then I want to go talk about the long and the short trade we have on the 15-minute chart. So the first one we'll go over, I'll tell you what, we're going to go over the long trade that we have. Here we go. This is 8.236% long setup we have. Let me go ahead and draw the Fibonacci level on it here. Let's see, the high there is 62.58, 62.59, close enough, and then we have low here, 61.58, 61.58, perfect. Okay, now 1 second. Down a little bit. All right, so we have, that's the setup, 8.236. There's the high, there's the swing low. It came at the 78.6% retracement line, so valid trade. So then what we're looking for, the first entry is going to be the negative 7.236, which is actually 8.236. When you go in the reverse way, you got 100% to it, and so that's gonna be the first entry, this green line down here at 54.25. 25. So as you can see, price came down here and hit it. Let me fix this right here. So if this trend line gets broken right here, you could look for a little bit of a deeper retracement, probably to at least around 50% or so when something like that happens. Or it could also come back all the way down into this area, down right in here where the black line is, or right where the 78% line is right there. I don't know. It's just a couple things to watch for the next, well, tomorrow's Friday, so definitely Friday, and then also next week to see if it is truly going to break out and go higher, or if it is going to retrace back down and stay in this channel right here. So let me get rid of these lines right here. Let me fix this right here. we go. So that's going to be an entry right here. Current exit up here is just below the yellow line up here, so just be safe, get out, always get out before the hard exit. So if I was in this trade, which I'm not right now, I'm not trading oil right now, it would be about 57.15 or so is where I'd probably have my exit. Maybe 57.10. Maybe if I really do want to make sure I get out, good round number, 57 even right there to get out. So I mean, if you're getting in down here around 54.25, going up to 57 is going to be an amazing gain for that trade right there. So as you can see, price has gone down and it is currently just sitting around right there. So as I showed from the hourly chart, you have that trend line that just got broken, and now there it is. Got broken, came bounced off of it, now it's bouncing up right here. So is that going to be the true signal that the downtrend has changed now and we're now in the uptrend, coming up and excuse me, tongue tied, coming up and getting filled up here to around $57, in between 57 and about 57.28 where the hard exit is for it. So I don't know, but it is a true long setup that is long right now. And just to go over the other entry where it'd be, so if price continues to go down without that exit getting hit up here, but goes all the way down here to the negative 21.236, which is actually the 2,223.6% Fibonacci extension level, down here at 40.06, then that would be an entry. Next it moves to just below the negative 7.236 of 54.25, so just be safe, get out of it. I would probably have mine at least around $54, something like that. So as you see with this setup right here, there definitely is a drawdown. So when I do use this setup right here, I always make sure I have plenty of margin, I have plenty of money in the account, because yes, I have seen it plenty of times go down all the way down here before the price does retrace out, and sometimes it does even go below the negative 21.236. So yeah, definitely with this trade, when I do trade it, make sure I always have plenty of margin, plenty of money in my account to handle the drawdown, because that's just the way I trade. My trades have some drawdown with them, but hey, you know, it works for me. Enabled them through meditation, and that's what I recommend for everyone. Meditate, tap into your subconscious, find out the trades that work for you, start being profitable, making money for it. Just do what works for you. That's all that matters. So anyways, that is the long right here that we currently have for that setup. Let me go ahead and remove that Fibonacci trade for it right there. So it is a long, it is valid, it is current, but we also have a short trade in it right here, and let me show that. So this one right here is going to be the 78.6% short trade, using that swing high there. That swing low, let me show you where originated from right there. You can see that swing low, price came up, hit the 78.6% line. So just make sure I get it pretty close to being perfect. Low is 52.63. No, hold on, that's not right. Low is 51.38, perfect. High is going to be around 52.94, 52.94, perfect. Okay, so after you had that swing point high, and then for this one right down here, in fact, I need to move this right there for that swing point low, price come up, hit the 78.6, then came down and hit the 123.6% level. So that makes this a valid setup. So then you just draw the swing point low or anchor point all the way down the bottom, and now all I was waiting for is a 78.6 level to get hit it perfectly right there. Almost took out of the trade. If it came down a couple more ticks down below, I would have said this is close enough to be complete. But as you can see, the low right here, 52.19, 52.16, still is enough of a gap in there for this not to be completed for it right here. So it's still a live trade. So that would have been the first entry, 78.6. First exit, 52.16. Never got down to hit it. And then price went up and hit the 100% level, 52.94, and that moves the exit to the 78.6 line, the bottom of the green box. So I'll be around, just get out to be safe, 52.65-ish, something like that, to get out of it. But obviously that didn't hit, so it's still a live trade, still valid short. And then if price continues to go up all the way up here to 55.47, that'd be your next entry level at the 2.618 Fibonacci extension level. And then you move your exit down here at the bottom of the blue box to the 100% Fibonacci retracement line at 52.94 is the hard exit, but I'd easily have it at $53, maybe even like 53.05, 53.10. Just make sure you get out with just make sure you get out of this trade, and obviously you'd have like plenty of profit if you got in up here around the 55.47 level. So yeah, so that's currently where it's at right now. This is a current short setup right here. Let's just see how close it's getting to a trend line break. And again, this isn't an exact science right here. Trend lines are very subjective on how you draw them. So the biggest thing about them is they look great after the fact, and I know a lot of people selling it and crap like that. It looks good after the fact, it always does, but when you're drawing them, like I said, they're very subjective, and you won't really know until you have one, until it actually breaks and shows some movement off of it. So, and just kind of guesstimating off of it right here, I look for as many touches as I can. So that kind of looks somewhat like one right there, but again, won't know until something actually comes off it right there. That may be a little bit too much, but anyways, I'm just splitting hairs right here. So we'll just say it's that right there. You can see it bounced off of it, and now we'll see what's going to happen over here. So if it does break out of there, if this does break out of there and say this is the correct trend line for it, let's say it breaks out of here, I'll be looking for a price to come back up, use that former support as resistance, and then have the move back down here. So not saying that's going to happen for sure, but that's just one thing I look for when this trend line breaks when in the trade. But again, this is a valid short trade that it is in right now. So you have the short trade right now, you have the other long trade I showed just a second ago. So what I said in the post, and this is what I'm looking for, is I'm looking for the big move to happen, whether it's up or whether it's down, and then I'll be pounding the table one way or the other, which way oil's going to go. I feel like oil's going to go right now. I mean, you have two valid trades, so if you want to go long, hey, good. Again, it's a valid trade, the 8.236 long. If you want to go short, hey, you got this 78.6 valid short trade right here. And that the exit for both of them is the final exit is going to be in profit either way. So like here's the final exit for the short trade right down here, and then the final exit for the, I'll go back to long, zoom out a little bit, for the long trade would be right below this yellow box right here. So either way you'd get into it, you know, you really wouldn't be losing on the trade when the final exit is eventually hit. And that's the worst case exit, the bottom of the yellow box for the long right there. Currently it's at the top of the yellow box right now. It just needs that negative 21.236 level to get hit. So just rewind that video if you need those numbers again for it. But what I said in my post and what I'm waiting for right now is I'm waiting for the step to happen, because I would rather get in at a much better price and get the full rerun or retracement for it, rather than having to scale into it. You know, you get in now and then say you're going to get it short right now. You get in right here. Well, what if price just takes off all the way up here, which it could, and it could even go higher. I've seen, you know, the price get hit up here. Doesn't have this one on here. Yeah, the 5.236% level, and even at the 8.236% level. Now this is a little bit bigger move right here, so I don't know if it would go that high for it, but I have seen the 78.6 moves go up to these levels before they do retrace all the way back down and take these out right here. So although this could be, you know, a good entry to get in, could be the high before it retraces back down and takes it out down over here, I'm just holding off until I'm just waiting for the big move. That's where I trade. Is I would trade after the big move happens. Before, I had tried trading being a breakout trader, and that just wasn't for me. I lost money doing it every time I tried doing it. So, and even sometimes I still, you know, trick myself and get in looking for the breakout. But all the steps that I utilize, they're mainly utilized after the fact, after the big move happens. Then you get in, you either fade the rallies or you get in long when the price has gone down a bunch. And that's what I'm looking for. I'm waiting for these big moves. So if, say, in this setup right here, the short setup, if price skyrockets up here somewhere, say this long up here gets complete, goes all the way up here, then I'll be pounding the table and say, hey, get short, this market's moving back down, that long is out of play right now, the short is in play, and the exit would be looking down here for the short is all the way down here at $53. Then, and you know, if price is all the way up here at about around 57-ish, 57.50, something like that, I'd say, hey man, get short. That's definitely what we're looking for. But on the flip side, if the price over here, let me move all this over here, from where this is right here, if price from here goes all the way down, takes out the short down here, I'll make this a little bit bigger. Hold on, let me go back to the 15-minute chart. The price right here, from where it is right here, just takes a nosedive down, takes out this short down all the way down here, 52.60. Then I'd say, hey, let's really think about getting long right here, and especially if it keeps on going lower down here like that, then I'd say, pound the table, let's go long. So right now it's kind of in the middle of no man's land, even though it is a valid long setup you can get in, and it is a valid short setup you can get in. But I'm waiting for the bigger move to happen before I recommend one way or the other to either get in long or get in short, like I was so adamant about after the Saudi oil field tax, when he had this huge move up, and I was not screaming, but I was very adamant saying, hey, fade this market's coming back down. So I know I hate hedging for it right now, but I did give 2 valid setups that ran long and short. But for me, I am waiting based upon adding to my positions on some oil stocks that I own, ConocoPhillips, Southwest Energy, and Oxy, to see which way to see what's going to happen. Because if price does collapse and go back down over here, then I'll be looking to add to them. But if price takes off and goes up over here, goes up over here, where's the arrow right here, goes up here, then I wouldn't be looking to add to them, because I'm just looking to add to them for weakness in the oil field. But anyways, I know I'm starting to ramble on like that. Hopefully that helps. It goes over the charts a little bit better that I had in the post that I put below here in this video. So again, if you ever want to see me go over any stocks, futures, forex, or cryptos, feel free to let me know. Basically, if it's tradable, I follow that market. I personally trade stocks, futures, forex, and cryptos. So just let me know. I'm glad to do it. All right, thanks. Take care.